I can share it. So hi, good afternoon, everyone. Is everyone back? Hi. Okay.
Hi, Hope.
Okay. Hi,
Hi,
everyone.
Jer.
Okay. So Miss Goldie is here now. So before she starts with her talk, I'd like to introduce her first, syempre. Okay, so Miss Goldy Yancha has been working for more than a decade in technology and social impact driven organizations with experience in rolling out digital products, running business accelerator programs for technology startups and impact driven ventures, and now facilitating win win partnerships for investors and startup founders by adopting a gender lens. Hailing from Cagayan de Oro, she has worked with various companies, and to name a few are PhilDev, eSIP, and Idea Space Foundation Inc. Since we've already run through the definition, types, and stages of startup fundings, Miss Goldie will be giving you an overview on how the startup funding scheme works, especially here in the Philippines, how it looks like. So you'll have a good perspective on how and you fund your startup. So yun na yun. Thank you, Miss Goldie. Take it away.
Sure. Thank you, Sure. Maing buntag, wala pa nag-lunch sa tanan. Thank you also for, I guess, waiting. It was kind of a long wait. I was on the road and I didn't expect traffic to be that horrible. So again, thank you for your patience. Curious to know, is everyone in the group from CDO or not?
No, may incubatees kami since virtual kasi, may
Mm-hmm.
incubatees kami from Manila and other parts of the Philippines. But I'm sure it's outside of Mindanao din.
All right, cool. Sige. Maybe later when people have questions, and if you're from CDO or you're Bisaya, feel free to storya in Bisaya kay gimingaw na kog storya o Bisaya. But anyway, while we're, I guess, setting up the slides, yeah, I'm Goldie. I'm happy to like be in conversations like this, and like the ideal scenario of what I'd want to happen for this conversation is that it is like, rather than me just talking, I would want this to be a conversation, right? I want to know more about what you guys are building, what your startups are, what stage you're at, what you're looking for, and then I can share what I know as well. So Ashar had mentioned, I've always been in tech, used to work for corporate, and then maybe the past 6-7 years worked in accelerator programs, which is basically helping startups like you get to the next level, similar to this Spark Track program that you're in with USTP. So, okay, that's good na you guys know na the definitions and the types and stages of startup funding. So if there are things that aren't clear or are redundant, I mean, let me know. If there are things you want to kind of dive into further, kind of let me know. So next slide. Yeah, so before we move on, if I can hear from maybe 2 or 3 people, can you share why you decided to build your startup? Any volunteers?
Incubatees.
Na kay kung mangayog funding kinahanglan ra mabagag nong. So this is good practice. Anyone? Why did you build your startup? Or first, like, what's your startup? What startup are you building? And then maybe the second question is why did you decide to build it, right?
Any volunteers, or should I start calling people
And
or
there's,
startups?
yeah, there's familiar people here. Um, so I mean, I know Checkmate, right? I've met you guys the last time I was in USTP, and then you guys got funding from EO, diba? That's what I know. Ed, do you wanna share why you guys decided to build Checkmate? Or are they there?
Hi guys. Goldie is asking if you can share
Hello,
your.
ma'am.
Okay, all right, thank you.
Hi.
Hello, ma'am. Goldie. My name is Hope, ma'am, Carino.
Yes,
And
hi Hope.
my startup is Piso hand sanitizer dispenser. It's technically a vending machine for your hand sanitizer. So
Right.
I decided to build my startup because it was just an aha moment wherein at that time it was very hard to secure alcohol or hand sanitizers. So I was thinking, what if I'll just build like the water piso or the hollow piso water dispenser, but twist it a little bit and make it a hand sanitizer. So I thought of the idea was unique and catchy. So that's why I decided to start the piso hand sanitizer dispenser.
Cool. And so thank you for sharing, Hope. It's seems like an idea that's very fitting to kind of what people need in this time. Um, and then are you guys like, is your product ready? Have you been selling your product or are you still prototyping it?
For the meantime, I cannot say it's really prototypes, more of an MVP. I've already placed one unit on an carinderia.
Mm-hmm.
So along the way, I have found out that somehow I'm still finding my niche. So I know it's different for startup because I build the product first and then trying to find the market, wherein it should be the other way around. So I'm not sure yet how to position. Initially, I'm thinking of it as a refilling station for hand sanitizer at the same time for public places. So that's my initial findings.
Okay. Cool. Thank you for sharing, Hope. And then, I admire your awareness din na parang it's an idea and then it's like maybe the not the usual startup process where there's validation, right? But nevertheless, I mean, the thing is like you're aware of it, no? So that's good to know and good to note as well. Um, Maybe one more person from the group who want to share more about their startup and why you decided to build it.
I can go. This is
Yes.
Richard
Hi,
from
Richard.
yeah. We are from Dirtbag. Dirtbag is an on-demand laundry service.
Mm-hmm.
We somehow we tag ourselves as the Uber of laundry. So we are an aggregator of various laundry services or laundry shops. Currently based in Cagayan de Oro.
Cool.
The move to from corporate to entrepreneurship has been there for quite some time among us friends, no, but we couldn't find the right business to that that we could utilize our skills until such time that instead of thinking about in that way, we thought about some problems which we can solve, and the problem uh, uh, that came up was our household problem. So basically, from our family, my wife primarily, who's been jumping from one shop to another because of different types of issues. Like, okay, first she went from one shop, and then she's not satisfied with the quality, so we moved to another. So that has been an issue for me, because in most cases I'm the one driving, going to the shop. So we thought about, hey, why not build something that could solve this problem? And yeah, here we are. We've been operating for, I believe, almost a year. We are already achieving sales, and our mobile app is already on beta stage. So we are hoping to release it on our anniversary this coming October 5.
Nice.
Sorry, sa plug.
No, that's good. That's good. I mean, if anything, like, don't be sorry, right? If anything, these are the opportunities where you can network with people, build relationships, and also get your message out there. So while the app is not there, and since you guys have been getting sales, how do people order through your platform? Is it a website, a Facebook page?
We are doing a Facebook only at the moment.
Mm-hmm.
We have already around 20 customers using our mobile app. Still,
Mm-hmm.
mga suki lang, no? So we are not yet launching it. So we can get feedback and improve before launching it. So Facebook is the main platform that we are using, and it's
Okay.
also timely, and it's easier for us because there's Facebook ads. It's easier for us to
To
uh,
target also.
bring message across. Yeah, yeah.
Yeah. And then sorry, like maybe before like moving on, kasi it's also interesting. So you guys are an aggregator, so it's parang the user experience is it's up to the customer to choose which laundry shop to pick, and then what you guys do is you do the pickup and delivery. Sakto ba?
No, because actually that's one of the problems that we are trying to solve also, because
Okay.
that kind of platform or services already existed, I think, in Metro Manila and Cebu,
Mm-hmm. Yeah.
and I have used that kind of service before, and it's also time consuming, right? I mean, why should we be burdened as customers to choose? I mean, it does not make any sense for us. So
Right, right.
what we do is we are the face, we are the brand itself. So customers see us as
As just
the
one,
laundry
yeah.
service. Yes, yes.
Okay.
So they wouldn't know which shop we are going to launder, but in terms of quality, we maintain the quality. We take control of the quality. We have our in-house folding staff. We have our
Okay.
own standard detergent and fabric conditioner. So basically, we just don't have our own laundry shop. So we use
So
mainly
parang
the
you
shop.
do the coin ops, the shops.
No, ma'am. The full service laundry na type siya.
Okay.
Yes.
Okay. And then you also do pickup and delivery.
Yes, and the good thing about our pickup and delivery is that since we are catering the entire Cagayan de Oro, so there's no constraints when it comes to location. So regardless, as long as your barangay is part of the Cagayan de Oro City, whether in Indahag or in Bogo, Ipunan, we serve you for a uniform price also. So it won't matter how far you are from, wherever you are in the city, you will get the same price as with the others.
Okay. Cool. Um, Thank you for sharing. I know that was a lot of questions, but that paints a better picture of where you guys are, and good to know that you guys are um, you know um, have rolled out and are learning from your initial customers, and will inform also as you invest further in your app. So thanks for sharing. To your next slide. Thanks, Shore. Yeah, so the reason why I asked about you know, why you guys decided to build your startup is in any case, right? Um, essentially, like the way to um kind of bulletproof your um startup journey, or at least mitigate it, is to make sure that maybe we're not a solution looking for a problem, but we really understand the problem properly, so that whatever features that we put into our business solve the most painful pain points, um, and will get us a step closer towards getting the traction that we need to be able to build a scalable business that can open opportunities, more funding opportunities, than just funding it ourselves, right? Um, Next slide. You guys already probably know this, right? Um, uh, Before we launch businesses not just to serve our own problems, but we launch businesses and solutions because we want to solve the problems of, next slide, our customers, and make sure that they're happy, they're content, they're satisfied. They're even so happy about your solution that they'll want to tell their friends or share it on their channels, right? Because they find your solution so compelling. So it's very essential to understand who your customer is. So in the examples earlier, right? Like, oh, there was an example of, oh, I'm going to cater to small scale businesses who maybe it's expensive to buy my own alcohol, right? And like have the customer pay for it. And there's this solution that thank you, that I'm going to offer to these businesses. Alternatively, for laundry, right? There's the personal pain point of, I don't know um, where to go to get good quality laundry services. And especially in this time, karon ngayon, it's so much more challenging to kind of go outside. I know like the situation in CDO is different from maybe Manila or Cebu. But it's these extra precautionary measures where customer preferences have changed because there's the safety component, there's the um, there's the convenience component on top of the safety component that people think of now, that sometimes they'll want to pay extra for something that caters their needs. So there's that. Next slide. I'm not sure if they already know about like the design thinking process, right? But it's kind of just connecting why it's important to go back to the customer and understanding the customer, and how that relates to um, um, your solution, right? And understanding what their pain points are. And then being confident. Like, I want to point this out because I know, like, siguro at the start, parang people didn't want to speak up, or I don't know if you guys are there. But some of you are there, and that's good. But it's also important to really have that confidence and self-awareness um, to sell our businesses, right? When we run businesses and we fund it ourselves, you can kind of run it without having to um, ask for external funding. But the moment that we ask for external funding, for example, through grants, or even asking our relatives for money, right? Or asking for investments, we'll need to have that proper, well, the confidence, the self-awareness, because they'll want to ask more about the business. Um, and being able to articulate what we need to share about the business as we do that. So um, I'm not sure at what point you know about the kinds of funding. I'll also mention that, and the different kind of nuances around that. Next slide. Okay, so like with the like design thinking mindset, like the idea there is kind of going through the process. It's determining in the perceived problems and pain points, and then these features. Because usually when we create stuff, we'll say, oh, I want like feature A, B, C up to Z, right? But in reality, we'll want parang building out all those features takes time, it takes money, and masakit na if we spend all that much and um, people don't necessarily need all those features, and we could have saved on both time and money by just focusing on the features that solve the deepest pain points. So that's the premise of why we study further on what customers desire, what we can afford, right? And what's possible, technically possible. That will help us get to rolling out like the first kind of solution to the market. Next, right? So yeah, it's important for like especially for getting outside funding, like being able to demonstrate the problem solution fit, right? But that being said, because I don't think it needs a lot of we I don't necessarily think that we need a lot of money to be able to validate stuff. Just really getting out of the building and asking people. But then to prototype something and get something out there, we do need resources. We need um, our own sweat equity, if you will, talent, etc. That those are resources, right? Funding is a resource to be able to buy raw mats for us to build our prototype. So, what are those kinds of funding? Next, right? So, these are the kinds, right? So, bootstrapping, I don't know if you guys are familiar with the term, but that's just basically self-funding startup. It's our prototypes or our alpha beta versions of our startup. And this is good if you have your own savings or you've had another business that has kind of grown, and then you're gonna self-fund that. Crowdfunding is there's if you're familiar with Kickstarter, or there's a local solution called Spark Project, um, where you can post about your project and get other people to fund your startup. And like technically that's called rewards crowdfunding, because in exchange, parang you'll give them the product once it gets manufactured or released. There's in other countries, it's not around in the Philippines yet. There's other kinds of crowdfunding like um, debt crowdfunding. Well, technically, there are debt crowdfunding solutions in the Philippines, pero they're very niche to a particular industry, like si Cropital, right? Cropital does essentially debt crowdfunding for farmers, right? So farmers are able to access loans through the platform from people who decide to fund them there, and then people who fund them actually get a return, right? There's a risk, but yon, that's the exchange. Rewards crowdfunding is really more you get the product, right? And you're kind of advancing to them the money to be able to manufacture or release the initial product. There's other kinds of crowdfunding, like equity crowdfunding, which is think parang it's kind of like, imagine the Philippine Stock Exchange, right? Who here invests? Um, it's so essentially we buy shares of the company, um, just like many other people, so that these big companies can fundraise externally and get more liquidity or money into their business so that they can use that to grow their company further, diba? So, but it takes a high level of corporate governance, of profitability, of business size to be able to list in the stock exchange. But there are other countries that allow for being able to, parang it's like a mini stock exchange in effect, where startups are able to sell parts of their company for initial funding while they're still early, or even um, pre-revenue or pre-profitability. Um, if you notice, I don't know how much you guys kind of follow the news of funding for startups all over the world. If you notice, in, let's say, the US or in Hong Kong, which are very developed markets, even big companies who aren't yet profitable, or haven't even yet, or pre-revenue, are able to list there. um, in our stock exchange, we're not able to do that. There's very strict requirements, and it depends on the sophistication of the market. But just letting you know that that exists, and what we have here in the Philippines is rewards crowdfunding. Um, Third is debt funding, so basically utang, right? It's what you would get in a bank, for example. So you borrow some money, they earn through the interest. After a certain period of time, you pay them back. There's all these business loans that um, help companies deal with working capital. So and for you to be able to get that, usually you need collateral. So some are lucky to have collateral to be able to access this kind of financing, some not so much. So it can be inaccessible for others, but accessible for some. And then angel funding. So earlier, Shore mentioned like where I work for. I recently started working for this nonprofit organization called Manila Angel Investors Network, right? So what is it? It's basically a group of angel investors who invest in early stage high growth companies. So similar to what was mentioned before, it's a challenge when you don't necessarily have collateral, or you're at pre-revenue or pre-profitability, but you need to get to the next level, right? These are basically this kind of funding entails selling shares of your company in exchange for funding, but with the expectation, of course, that the value of those shares or the value of your company will grow, so that these people who give you money um, will also get returns from their investment in you, right? So again, comparing it to when we invest in stocks, right? I mean, of course, like it's an intense crunch right now with the COVID situation. It's starting to recover, but like the idea is we invest in a certain, let's say, blue chip company because like we believe that that company will grow. And if I buy, let's say, a share for 50 pesos today, that in 5 years that might be, I don't know, 75 pesos, or I'm able to earn through dividends, diba? So that's kind of the idea. But with angel funding, you're investing in privately held businesses, so it's not through the stock exchange. with that, still with the expectation for return and growth of the value of those shares. So there's that. And then VC or venture capital, um, it really depends on the stage of the company, right? Angel funding comes in early. So again, pre-revenue, but like for Main, for example, it's really at MVP stage and beyond, right? For VC, it's usually already knowing your product market fit. You're already growing. You want to grow it further and formalize and professionalize your company. So that's where VCs come in. So I don't know if you've heard about terms like pre-seed funding, seed, series A, B, C, and beyond. So parang that just represents kind of what stage you are in your fundraising journey and in the stage of your business as well. So VC is a much more later stage. A and beyond, iba-iba din sila. Iba-iba din yung hinahanap nila. So, there are some players in the Philippines. I encourage you to look later. I'll give you examples of who they are and like what they look for. And then Shore can give you this presentation so you can like easily click on the links as well. Next. Also, if you have questions at any point, just so I feel like I'm not just talking to a screen, I'm actually talking to people, feel free to ask or share your comments or build on the conversation. I mean, I'm happy to kind of learn from you guys as well. Diba? Kay, I mean, it's also good to be able to know who you guys are. So this is US information, like in the notes of this slide are the links to where I got this from. It's just really from the internet. But again, examples of sources of funding. Usually, it's coming from your savings, or you have a credit card and you borrow that, or well, banks are a different thing. Friends and family is the second part. It's there's this term called 3 F's, right? Family, friends, and fools. So it's being able to ask money from your immediate network, right? So parang before you go to angel funding, people who you don't know, it's being able to convince people you know to support you in your business. So parang goes without saying na parang it's harder to convince people you don't know to support you if you can't even convince people in your network that you know to support you. So that's the thing there. And then VC, which I explained earlier. Angel funding, of course, angel funding is a much smaller size, and VC funding is so much bigger because it is for bigger businesses, and then banks and crowdfunding. Next. Okay, so I'm actually want to ask, are any of you guys formally incorporated already, or or have you already registered your business? Anyone?
Yes, ma'am. Dirtbag.
Okay, cool. Are you guys a corporation, a sole prop?
Corporation po.
Okay, cool. So I don't know also if you guys have had the discussion in this program about the differences between, of course, you'll need to formally register as a business kasi when you, let's say, ask for funding, even through grants, right? Like they can't issue it to like, okay, I'll give it to Goldy. It's like it should be to an organization that has a formal personality, right? So sole proprietorship is actually much more straightforward to register your business. Like in terms of upkeep, it's much simpler. However, the difference there is that you as a person and your assets, you're personally liable should your business get into trouble, diba? Whereas a corporation is, um, well, of course, ngayon, we already have things like a single person corporation, and the best practices of having a corporation is that you have an advisory board to help you steer the business, and you have your board meetings, etc. Um, and it is its own legal personality. The corporation is its own legal personality. So there's much more upkeep, but I guess the advantage there in terms of risk management is that if the company does struggle, right, the owners of that corporation will not necessarily be held personally liable. So, for example, the nalugi ang negosyo, right? If you're a sole prop and you don't have enough money to pay for whatever liabilities that you have in the business, your other assets, your other personal assets, pwede siyang mahabol, right? But with corporations, that is not the case. It's its own personality. So it can be the assets within the corporation will be liquidated or will be sold, right? To be able to honor those liabilities. I don't know if that was too technical, but I feel that I need to kind of share with you guys because this is actually like basic business considerations to think about, especially with in the context of funding. So what we're seeing here in this sheet is actually a balance sheet, right? So every year, regardless of whether you're a sole prop or a corporation, you need to file your financial statement. So it's a balance sheet, it's an income statement, your statement of cash flow, a statement of owner's equity kung nag-change siya. And then, so like for the purposes of kind of deconstructing the different kinds of financing, I'm showing you the balance sheet to understand where things go. So a balance sheet is called a balance sheet. So if you notice, the total sa left side and the total sa right side are the same or balanced, right? So the point being, if you look at the right side, there's two categories, the liabilities and then the shareholders' equity. And on the left side, it's assets, right? The assets of the company. In my head, I call it ALO, assets, liabilities, owner's equity or shareholders' equity, right? So what that means is when you put in, diba, when we start a business, we put in money. If it's our own money, then it goes to our assets, right? The assets, cash, right? Let's say it's 100,000 pesos. In if it's our own money, uh, and we are the owner of the company, we put it as shareholders' equity or owner's equity, right? If let's say it's debt, right? So debt, we put it in liabilities because there are other things to consider. With debt, you put it as assets because you're able to borrow money. You put it as liability. It's separated from shareholders' equity because liabilities are exactly that, right? You get this money now, but you need to be able to pay it back with interest, and you are liable to that, right? With investments, it's also shareholders' equity. So imagine that, like for the people who list in the stock exchange, owners of companies who list in the stock exchange. If initially it was just a set of people owning the businesses, you're allowing the public to get ownership of your company in exchange for whatever value you sold it for. So that's the same thing when you, let's say, list in the stock exchange, get venture capital, get angel funding. It's like you're able to add your cash on the left side, but then that means that you're issuing more shares in terms of equity. And what that means is you are no longer the 100% owner of your company, diba? Because you basically sold parts of your company in exchange for more liquidity for whatever use. So, but before you're even able to get that kind of money, it's being able to convince them to say, okay, Goldie, why are you asking for money? What is it for, right? So parang I'll want to know na you're using the money to grow your business so that your business has higher value. So the next time someone funds your company, it will be at a higher valuation of your company. So the earlier chunk of shares that I got at this value will have a higher value, right? So when I sell it or I liquidate it to the next round, then I will have gained something. Does that make sense? Or is that complicated? Or do you have questions? Um, are you guys still there?
Yes, ma'am.
Okay. All right. Next. I know, I mean, because I'm not sure where people are in their, I guess, fundraising journey. So feel free to ask so that it becomes more of a conversation. Um, so yeah, I think I shared this earlier. Number one, bootstrapping, funding it internally is the usual place to start, right? And three F's, asking money from your family, friends, and like it's just a joke, but fools, right? People in your network who are maybe acquaintances or a referral, right? Um, Being able to convince them to fund you, that's usually the first place to start before going to angel funding or VC funding. Number two is debt makes you liable. It's again, that's why it's under liabilities to pay back the borrowed money plus the interest. So the interest, it's not shown in the balance sheet. It's actually shown in the income statement because the interest is an expense. So you have your revenues minus your expenses, and then your profit, right? And then third, the external equity investment sources are more challenging to get. Why? Because you need to be able to demonstrate one, your moats. What are moats, right? Moats are basically um your differentiation. Moats, 'di ba? Kanang moats kay mo man ning sorry. The moats are these things like these barriers, right? For you not to be defeated. So, what makes your business so very defensible, right? Versus potential competitors, whether that be direct or indirect, right? Sometimes it's a function of, oh, I have these key relationships, or the expertise of my team is very strong. Um, I'm the only, I don't know, data scientist in my country or something, things like that. Or I have this IP technology. Yes, exactly. Barriers to entry. So that's what a moat is. Barriers to entry differentiation. Awesome. Second is evidence of growth or your growth plan, right? So it goes without saying na when you're still at idea stage, right? It is high risk because there is no evidence to back that it's a viable, feasible, desirable business, no? So that's why it's usually self-funded at first. But then if you have evidence of growth through sales, right? But I also want to clarify, it doesn't mean that if you have sales, then it's necessarily, oh, I'll invest, right? It also depends on the quality of the sale. So there's things like, oh, what is your customer base? Is your customer like how is the growth rate doing? So year on year, month on month, of the transactions, like what percent are repeat transactions, right? Because for all we know, it can be, oh, people try it, but then they like go back to the other solution, or they don't feel that they it really solves a problem, so they don't buy it again. So for example, diba, there's, I'll just maybe use Grab as an example. There's Grab Platinum users because they're like very loyal. So you have your number of transactions, and you know, like, okay, the average number of rides per customer is like this and like that, and that will be the thing. Now, oh, why did it go down, or is it going up? And what are the things that we're doing to drive higher use and loyalty? So these things, traction, and the quality of the traction is important. But it goes without saying also that it doesn't mean that if you don't have traction that you won't get funded. Of course, it's still possible, but like having a proper growth plan and being able to articulate that is very important. And that's related to letter C, which is use of money. So to share, maybe when I was starting with, I guess, the first accelerator program that I worked for, this was 2014. So it was very common, right, to hear people pitching about their ideas and then expecting funding and then for this equity. But then when you ask them, how will you use the money? Like, there's no clear answer, right? Usually, like, and I'm happy to share that, like, recently people who have been pitching, like, have a better semblance and understanding of this. What is it in essence? So it's under, like, being able to articulate why you need a certain amount of money. So diba, being okay, is it 1 million, 5 million, how you plan to use it. So it's not just gonna be oh, for salaries, or oh yeah, to build the product or pay my devs, right? It can be a combination of that, but like the more specific you are, right? And then how you imagine or envision that use of money will translate to the business achieving those growth targets. That's the ideal scenario, right? When you use of money, you know how much, you know what for, and you know what it will achieve. So, going back, right? If you're a, let's say, stockholder of a publicly traded company, diba? And there's these annual reports that you see what their plans are. It's kind of like that. Like, even in when you're starting up, right? Na you need to be able to demonstrate, if you give me your money, this is what I'll do, that's what I'll spend it on, and you'll be able to grow your money with me, because we'll be able to for example, increase our revenues. I'll need investment money for me to hire my business development team, because I mean, as a founder, I'm doing business development and I'm doing it alone. But if I hire two more, then it will help us penetrate our target market much faster, right? Or it can be you have an app, but you, through the initial user data, you're seeing that, oh, something is falling out, but then this will make the experience more sticky, therefore increasing transactions, therefore increasing loyalty revenue, right? And so therefore I need investment to be able to build out this part of my product. So that, those are just one of many examples, right? But again, how much are you asking for, what are you using for, and what will it achieve, in the context of giving your potential investor confidence that he can grow his money with you, right? The potential returns. So, and through valuations, caps, and discounts early on, when you ask for investment funding, like and when you're very early, it's hard to say really what your valuation is. It's usually arbitrary, and there's all these terms. I don't want to go deep into that right now because it might not be what you're looking for at this point. But yeah, it's related to the use of money, right? What are the potential returns, or ano yung balik to the investor if he or she invests in your company. What that also means, right? If you get external equity investment, and I don't even think it's just equity investment, it's even like when you get grants, etc. You'll need to really organize your company better, have better governance structures. So for example, investors ask for quarterly updates. Some of them get monthly updates. Some of them get observer seats. So these are like board seats, but then they don't have voting rights, if that makes sense, in your company. So they are kept abreast of how your business is. And really the great kinds of investor money are the kinds where they are involved, right? And they're involved for a good reason. They want to know how your business is, so that if in case you're struggling here or there, they can give you advice, they can open connections for you, referrals for you, because they technically own part of your company already, right? And it's not just money for its own sake. So those are key things to consider. Next. Yeah, so this is like, I was reading CB Insights recently. So this is the latest thing map that they have. This is just an example. These are examples of well-funded tech startups in our region, right? So if you can see in the Philippines, I don't know if you guys are familiar with First Circle, but they're essentially like an e-invoice financing platform based in the Philippines. The ones that are darker are like, in terms of the funding that they got, it's much larger. So I'm pretty sure you guys know Ant Financial. So if you guys are familiar with, let's say, Gcash or Paymaya, right? So they're that in China, and in fact they have been investing in different e-wallet companies in the region, because especially now, diba, with the advent of online, you'll need payment gateways to be able to buy your thing in Shopee or whatever. So that's a crucial thing as well. So if you see Grab, for example, it's there. Gojek is kind of the Grab counterpart in Indonesia. I wanted to share this slide because it's an example of startups that have gotten funding, but like, it's also being cognizant of like the extent of the size that they've gotten to have been able to get that funding. But also on the flip side, it's also kind of um, being aware na it's not a guarantee, right? So diba, like with that, you're personally liable. Some investments pan out, some investments don't. So for example, yes, exactly, right? Vision Fund. So with WeWork and ano pa ba? I think they have a stake in Ant Financial, and I think they're trying to sell that recently. So yun. And then, so yeah, that's just really the point of it. And to Hope's point, like, not in fact, if you look at the universe of funds, right? Actually, most funds fail in the sense that they don't get a return, right? But it's like, so there was a blog of one of the actually of one of the VCs, the more famous VCs in Silicon Valley. Like, this can be, well, so I'll answer that later. Na parang this can be parang it can be a metaphor to the early expeditions, right? Where people were given funding to go on ships to explore different parts of the world, to expand their territories, right? So we were discovered by a ship from like whose captain happened to be Magellan, right? So but then there's other ships that didn't go anywhere, that failed. Other ships ended up discovering other countries. So that's how it is. There's a question here. Is a startup a bubble? I think so. That's the thing, right? If it's too much hype, when people put in money without proper evidence, like that's what bubbles are made of, I feel. But yeah, at the end of the day, if we're able to back compelling businesses, right? I mean, how I ended up in the startup scene, or even how I knew about startups, was because Facebook happened, because Google happened. I was studying about Google when I was in college, when they're still starting out. They didn't call it startups, right? So I think it's that. It's like it's important that the ecosystem looks after each other, right? So there's these programs, like the programs that you guys are in, to help you get to the pathway of being strong, viable, feasible, desirable businesses, right? So that if and when you do get funded, right, your chances are higher. But it's just also a reality that not everything works out, right? But then it's also necessary. um I don't want to call it evil, but I guess it's a necessary thing, right? I mean, we're lucky if we strike it successfully the first time, but people, like, there's always a first time for everything, and there's going to be a next time, and people who do make it will end up kind of funding other startups in the process. And that's what's happening in the US, diba? Essentially, kasi PayPal Mafia, for example, they've exited, and then they're the ones building new startups again, or investing another company. So I don't know, not sure, hope if that answers your question. It's an opinion, really, more than anything. So yeah. Next. So I guess these are my final slides, right? But these are just hyperlinks to funding opportunities that I know of, right? So if you know Kubo, which is also another like an innovation hub, also a TBI that takes care of other TBIs. So if you follow their page, they do post opportunities for funding from time to time. DOST and DTI, they have their funds as well, but that depends. There's pre-commercialization funds, there's funds for international exposure, etc. And usually Kubo curates that information for you. For crowdfunding, so as I mentioned, the more famous international one are things like Kickstarter or Indiegogo. The local counterpart is Spark Project. I'm not sure if there's others. I mean, I've heard of others before, but they didn't like. I mean, I'm not sure if they're still around. I mean, Spark is the one that I know that's still around. Yeah, thesis like requirements. I know it's like I think it's just also part of the nuances of being able to get government funding, right? Because I guess on the flip side, 'di ba, parang us as taxpayers, we want to make sure that wherever our money is spent properly. So it's kind of their way to get like evidence that parang this is where the money is going. So parang that's what the papers are for. I guess it's just really because of the nature of the funding that you're asking for. It's public money essentially, diba? Um, for seed investments, right? So there's us, Manila Angel Investors Network. Typically, the preference really is MVP stage and up for scalable businesses, business models. So far it's been mostly tech startups, but really the ano is MVP and up, and then it's a scalable business model. I used to work for Idea Space, so before the model it was an accelerator program, and you used to get grants. I think now it's still that, but then in the end, I think it's a couple of businesses are able to get investment from them. So there's that route as well. And then they also accept idea stage startups. But you really have to go through that design thinking process, right? And getting that evidence and being able to articulate that. Exchange, it's also an accelerator program, but geared toward social impact. So they have investments in, I guess, 10 plus companies, but they support them through an incubation program. So seed is the earlier stage that's external. But again, if you don't need to give away your equity, right, or borrow money, if there are grants, like apply lang, even if you don't get it, just apply. There's nothing wrong, and then it's also a good practice to be able to improve, right? But when you're ready, and you're ready to have that conversation with investors, then go for it. But it's also good to know your options as well. These are the Philippines-based ones, but of course, it doesn't mean that you're just limited to Philippine investors. You can very much seek out funding from investors outside the Philippines, right? So that's a goal, right? Like we'd want to have a real startup unicorn in the Philippines. But it's not just, I guess that's the sexy way to go about it, but really building strong businesses whose solutions solve a lot of people's problems in a meaningful way. It's just really that, no. I think that's actually much more impactful and much more sustainable. So anyway, A and beyond. So there's VCs. There's different kinds of VCs. So there's a corporate VC, which is the way they fund is usually strategic to their current business interests. And there's financial VCs where it's they are the general partners and they get limited partners from other high net worth, either individuals or family offices, or even also different corporates. And it's really more for the return, right? So Kickstart is a VC from the Ayala Group. ICCPV, it's from the, I can't remember but basically that group that owns Pueblo de Oro. That's the conglomerate that's with ICCP. Endeavor it's also a nonprofit, but and they're looking for high growth businesses to support and mentor. And if you're able to reach that global level, you have a potential to access that global investment fund. Not sure if a Filipino has already done that though. Gobi Core, this is, I think, seed to Series A money. So Gobi Ventures is like an Asian-based fund, and then Core are the local partners here. I think like one of the Gaisanos is partner there too. Wavemaker, it's actually US based, and they also have an office here. Some of the partners are Filipino, so they have some Philippines investments also. JG Dev is the venture arm of the Robinsons Group. So they've also had what are their investments, like Beauty Manila. There's Kumo. So like Main was able to invest in Kumo and also Kickstart and JG Dev. many others that, again, it's strategic. If there's alignment to any of their businesses, then they try it out, they become a customer. If they like it, they invest in them. PE, private equity, is a much bigger kind of capital. So it's usually not just for growth companies, but for mature companies already. So established business model, profitable, usually, etc. So one of those funds in the Philippines is called Navigar. So if you've heard of, I don't know if it maybe last year, but they funded great deals, right, for $12 million, and what they do is they um, they're kind of the back office operator of FMCG brands to list online so that it's optimized, and they bundle it so it boosts sales. And there's many other things that they do, but they're profitable, and they got money from Navigar. They also invest in BPOs and restaurants. So it's not just tech startups. It can be tech businesses, but like for really, really mature companies na. I'm sure that there's many other funding opportunities and funders that are not in my list. And the way I personally get a hold of like what opportunities there are, whether that be funding or support programs, mentorship, grants, connections, is this really cool group in Facebook called Startup PH. It has high engagement. People have questions there, people ask. I mean, again, I encourage people to be active, right? Because if we're just there passive and just listening, like not much happens. But there are great things that have come off of this Facebook group. Like I know one of my friends who runs a startup as well. They had a conversation over some topic, right, on Facebook. Um, on Startup PH, they decided to meet. The guy liked it so much. This new friend of his from ano, and he became an investor in my friend's startup. So all these things, it is important to build relationships and network, right? There's also a newsletter called Startup Digest PH. And then that's an article too. It's a pretty old article, so some of the funds aren't around, but some are still there. So yeah, that's that. And I think the next slide is about like further reading into next slide, yeah, into like what to know about early stage VC, like what to what level are they looking for. And like just to also let you know, I haven't finished it yet, but I'm currently taking this online course about venture deals that I'm sharing with you if you're interested. It's by Brad Feld, the guy who runs Techstars, and this other co-founder of his, who they have a fund called the Foundry Group, and they talk about term sheets and valuations and all the technical stuff, right? That usually you refer to lawyers to, but if you know about it, then it's much better that way. So yeah, essentially, that's it for me. I hope you learned a thing or two. If you have questions, happy to hear them. If you have comments, happy to hear them too. Thank you.
All right. Thank you so much, Goldie. So, ako may tanong ako.
Sure.
Okay, especially since it's the pandemic, can you tell us if somehow the startup funding or investment schemes has been affected by the pandemic? Kasi we know that venture capitalists and angel investors take higher risks, especially with startups that they know have high sustainability or can be viable for a long term. So are they hesitant now to fund startups or not?
Okay, so maybe I'll share to you like what I've observed based on what I've read, and I guess what I've observed based on people's or organizations' responses to this whole thing. So yeah, COVID sucks, right? But like there's also there are businesses, unfortunately, that have failed, have closed down. And it's unfortunate. Uh, Again, there's the consideration of how consumers' preferences have changed. Diba? We don't want to go out as much, so we just stay in. Because of this, some startups I know have pivoted, right? So there's this one person I know who runs a travel startup. My God, like the travel industry just like is so looy, kawawa. Um, so his group pivoted to doing kind of informal e-commerce nga for agricultural products to still help their communities because this was a social impact startup. Um, and then there are startups that thrive through the pandemic. There's a startup um, I know who does say machine learning because and his revenues are actually growing because it makes more sense to automate some processes just because it's hard to get people in and out. Um, so on the flip side, when it comes to support, financing support, globally, of course, it has reduced in terms of value, but what they're saying is it's not super bad in terms of the amount, right? It went down, but not to a very big extent. The difference, though, is that the money has shifted from early stage funding to more later stage funding because, again, that means less risk. And people are much more kind of I guess cautious or aware or yeah, cautious. That's what people say. For like internally working with the main recently, even if it's early stage, we presented a set of startups recently. Interestingly enough, there are some rounds being closed. So I think it's a matter of are all members gonna invest in it? No. I mean, I don't know who used to invest and who doesn't invest anymore. But I guess the signal is there are still some people who are keen to invest. But yeah, it's just really kind of also knowing kind of what you have to offer and being cognizant of this new normal, and making sure that it actually kind of adapts to what people need right now, our customers need right now. That's why like earlier it's like it's not it's supposed to be a financing talk, it's not a design thinking talk, but I thought to add a bit of those slides there because I mean, that's part of startup life, being able to pivot, right? There's, I don't know if like you're familiar with this massage app. There used to be an app to book massages, but now they've pivoted to booking doctors and nurses to go to your house if you want to have a vaccine or you want to do a rapid test or something. So, you know, those are examples, right? But it doesn't mean that just because there's no funding that we should stop building. And I think this is the most crucial time that we need to build solutions, because if we stop building solutions and just like, take a back seat and not do anything, um, our uh, the people around us count on us and count on you guys to build compelling solutions to be able to adapt to this new normal. So yeah, that's my take. And that was a long-winded answer, sure. Pero yeah, I mean, in short, there's still investments. We just need to be more strategic. Yeah.
Thank you. Actually, ganong klaseng tanong, answer talaga yung kailangan kasi we're trying to make sure that our incubatees are still encouraged to pursue their innovation despite the pandemic. Kasi baka isipin nila because it's pandemic, wala nang magpa-fund, or yun nga, yung sinabi mo, investors might be hesitant, so they might force themselves to stop instead. So despite the pandemic, like Goldy said, there are still investors. Okay, startup funding is still out there, right? So
Yeah, and grants. There's actually a lot of grants. Yeah.
Another question. So since nabanggit mo kanina na something that adheres to a present situation, sa napansin mo, what are the siguro sustainable development goals or siguro verticals that are investors are inclined to fund right now?
I mean, I guess I cannot speak for other investors, right? But it's hard to say that it's necessarily just a particular industry vertical, right? But I think generally speaking, right, like solutions that are able to bring us to this new environment. So, for example, diba, like, were you guys using Zoom last year? I mean, I wasn't using Zoom last year. We're like TikTok, for example, diba? Like that's such a new thing, and basically their parent company is now the most valuable tech startup in the world. And I think that's because these solutions have adopted to allowing us to bring our humanity into the virtual world. I mean, it sounds corny and highfalutin, pero I think it's that. But like, you know, unicorns aside and big valuations aside, it's that you know, the restaurant industry, like here, it's actually so sad to see a lot of stores closing because people don't want to eat in. It's just dangerous to eat in at this point. So there's so much. It's a higher drive, for example, for logistics, right? To be able to buy essentials. So parang before, hindi like, I know if you know this app. There's this app here called My Kuya. You used to be Hey Kuya, where you get a kuya to do errands for you, or like, you know, Food Panda, Grab, etc. Like, for example, the thing, but then yun nga, it's not just one industry. It can be even enterprise people or organizations that are facilitating digital transformation for businesses who are struggling to do that. So to let you know, like our org just recently got on Sprout, which is an online HR platform, right? So that we can do our attendance, do our like leave requests, payroll in a stream, like on web. No more need for papers. So it's, I think, hard to say that it's just necessarily one vertical as it is. I think it's a thing where if the problem that you're trying to solve has anything to deal with helping people adapt to the new normal, whether that be through getting their food, running their business, doing their errands, etc. It's that do we still go back to the customer, diba? What is the journey of the customer? How has that changed? And what are things that we can address? And then, do I have the capability to do that? Shore also asked from b.i.t.e.s, how do you create valuation? So yeah, I think earlier I mentioned that it's like at the early part, it's really arbitrary, right? So it's based usually on a negotiation, right, of between you and your investors. But of course, you need to start looking at your company, um, how it's doing, right, and what the potential upside is. Um, when you talk to, let's say, investors who do Series A and beyond, there are methods to arrive at valuations. There's the DCF, you can search it, and then you look at comparables of different companies who have had funding, right? So, for example, see Grab, when Grab got funded, or Gojek, diba they're the same. They're essentially doing similar services. For sure their valuation was based on how much Uber also got. I'm not saying it's the same. There's a comparable, and there's like this calculation that they do based on, okay, the moats again, the quality of the founders, the market size where they operate in, etc. But is there a kind of a like a standard procedure to arrive at your valuation? Not really. I think more than anything, it's understanding if you do need money, how much do you need? Again, like, what do you need it for, and how are you going to spend it, and with your expected spend, what do you imagine will be the output of that, right? And then from there, if it's actually I mean, the ideal scenario is that it's going to be more, right? um that gives you a semblance of your growth trajectory also. But if that's why it's tough, to get external funding for like idea stage thing and stuff, and then you build out product and there's no validation. um yeah, but in short, it's arbitrary, especially when you're in the early stages.
I have a question, ma'am.
Sure.
Yeah. Since you are from Maine, right? I just need your advice on how to protect our business model because I think a month or two ago, we subscribed to a similar platform called AIN, Angel Investment Network.
Yeah, yeah.
I'm not sure where it's based. Um, I think it's good for us that we joined. We've been getting quite a number of responses and interest. Some are already on negotiation stages. What we're worried about is that the majority of those who inquired or who are interested are so keen on asking about financials. But from our end, we are not comfortable because our revenue model is like a trade secret for us because the business model is very simple for us. It's a buy and sell business model, right? But the financials that would make us arrive at a profit is detailed in our revenue model or in our financials. So if we pass that along, how can we protect? I mean, what's your advice? Should we give that information or not? Because we are not comfortable who these people are. Maybe they're just shopping of business models, and then if they have the right amount of money by themselves, they might get, because we are submitting our pitch deck, right? And then we are outlining almost everything, and then here comes the financials. That's the only thing that we did not share. Since you are also in Maine, do you recommend or would you advise that is it okay to provide those?
Yeah, I think so to let you know also the process, right? Like, we do ask for a pitch deck, and then the ones who get chosen to present to the membership, they're very transparent with their financials. So to let you know, in a 5-minute pitch, you're not able to present your financial statements. So it's usually your standard pitch deck, problem, solution, traction, next steps, what's your ask. But then before they actually wire the money, they'll want to check um, about the health of your company, and part of that is checking your financials. And so the startups usually set up what they call deal rooms, which is basically just a folder of files of everything, right? Like your articles of incorporation, your board structure, your cap table, your financial statements. Yeah. And I mean, I understand, I'm trying to understand, I guess where you're coming from. It is sensitive information, no? But I guess it's also understanding, to your point, it's good to research who's interested. Is it also someone from Cagayan de Oro, or if it's someone from Norway, 'di ba? Parang even if they copy that, like, you know, I don't think in the year or two you'll want to expand to that market too, right? So generally, it is a standard process for people to ask for financials because um, it's like investing in the stock exchange, no? The knowledgeable investors, right? Like sometimes it can be a gut feel, like, oh, I love Jollibee, I like Chicken Joy, therefore I will buy the stock, right? But then it's all, if you want to drill down further on um, the performance of the company for you to kind of manage your risk um, before deciding to buy the stock. You want to look at historical stock performance. You want to look at their annual reports. What were the how are their financials like? What are their growth plans? So it's kind of that as well. And yeah, it is sensitive information. That's why it's like fundraising is one of the most, I guess, unsexiest things to do, but it's a necessary thing to be able to do. To your point about probably getting the idea, to I guess that's the difficult thing with these online platforms, because you don't know who exactly uh, is there, right? Versus if it's like a vetted um, entity, right? Or it's also good to do your research on who's curious, right? And look at their track record as well, in as much as they're looking at your track record also. But I think offhand, it's a necessary. It's just a part of the process.
Thank you.
I,
Thank you, ma'am.
yeah.
Yeah.
Thank you, and all the best. I hope you are able to find um a good funder for you. Yeah.
Thank you. Hopefully.
Hope is asking, look at their LinkedIn. Yes, that helps. Like standard Google search is always good. Asking people. I mean, that's a thing with startup communities, right? Um, that's because we're small. We ask each other, oh, kumusta si ganito, kumusta si ganyan. So, like in much the same way that let's say investors also ask, or even accelerators also ask, oh, startup A participated in your accelerator and they're applying to mine, how are they? I mean, that's a typical question that we have internally. So I think it's also healthy for startup founders to ask each other, right? What's your experience like applying for money for this? What do they ask for? Is it safe? Have they been helpful? And so there's reputations that are built from there. Yeah.
Okay, thank you for that. So, wala nagtatanong because I think they're all listening, but I know they're there.
Yeah, I
Gold,
mean,
I have a
don't be
question.
shy.
Yeah, I
Yes,
know.
yes, sure.
Question. I know you have another appointment, so let's make this quick. Probably my last question. I'm actually curious about this, but maybe it might be a stupid question, but
No stupid
gonna-
questions.
if kasi ako mismo curious ako, as a person working with an investment firm, I mean, would you which would you recommend? Kung may international investors or local Philippines investors, if meron ba? Is that even a thing, or as long as
Sorry, you got cut off. Can you
I
say
sorry,
that
sorry.
again, please?
If I'm a startup and I'm looking for funding. Should I grabe nag-brown out. Should I international investors or mas preferred yung nasa Philippines, within the Philippines?
Okay. I would say it depends on where you want to go, right? So, diba, it's to be as strategic as possible. Parang at first, so going back to that, like the basic premise of how much money are you asking for what, how are you going to use it, and what is your growth target in with respect to using that money, right? So if your target use of money is for international expansion, for example, then it would make sense, right? If it's kind of, let's say, strategic, where I want to be able to get my solution into retail SKUs, then you'll want to go to VCs, strategic VCs who have retail businesses, or not just VCs, but also angel investors, because a lot of these angel investors um, are also business people with different businesses also, so they can connect that to you. So I don't necessarily think it's a um simple. Oh, okay. Yeah, I might cut off a bit because my internet's slow. It's not necessarily a simple situation of saying, just focus on local or global. I think it's more, when you sell, you have your list of potential clients, and you're not gonna get 100% of that, right? But then you have that list anyway, and you reach out anyway, with the hope that you convert a certain percentage of them. And that's the same with fundraising. Like, honestly, I don't think it makes sense to just approach 5. So the reality also is, are there 100 funds in the Philippines? So, I mean, I don't think so. So parang I don't think there's any harm exploring outside as well. But then also, the other considerations there would be like setting up an entity in the preferred domicile of the investor, and then that gets diversified the more you explore outside the country as well. But I think, yeah, at the end of the day, it's also like doing the research, right? Apart from getting the money, it's also, what are the other key strategic things that this organization or this person can do for me? Because technically, you'll be working together. You'll kind of be co-owners, right? You're still the captain of the ship, but then syempre, he or she has skin in the game because he or she is buying into your company also. So yeah, I don't know if that answered your question.
No, it did. It did. Thank you. So, I guess, wala na po bang tanong from our incubatees? I hope you gained so much from Miss Goldy. Kasi ako mismo, I'm very happy that you said yes, agreed to this at a short notice. Thank you so much.
Yeah, thanks also, sure. I mean, I'm always happy to have opportunities to share what I know. Okay, tabangay beta, we help
Yes,
each other
yes.
out, right? So I also was able to know some of these things through other people who helped me. So that's what I would encourage everyone also. If you did learn a thing or two, it's good to have a discussion and also share your knowledge to other people, because I think that's what makes great startup communities, right? When we convene and learn together, and be generous also with our knowledge. On a parting note, because earlier you had a question about how do we motivate ourselves in this COVID time where things are so depressing to continue building. There's this I'll send you the link, sure, and maybe you can share it to them. But there's this really great blog post about one of the early VCs in the US, and then it was called "It's Time to Build," right? Because essentially, innovators, the role of innovators in this critical time is so important. Like it's the innovators' time to shine, right? But then being able to roll out the right innovation banks on understanding like what people need, but really to help us recover from this or to help us evolve from this. Innovators have a critical role, and we count on you. And I think for people like us, me and Shore, who work in organizations that help startups, it becomes ever more important and ever more meaningful to be working in programs that support startups, that support innovators, that support founders like you, because we believe in you guys. So, padayon yun. Let's continue.
Okay, thank you so much, Gold, for this session. I think that's
Sure.
it. So before we formally end, can I please ask everyone to turn on your cameras for the
Thank you.
documentation purposes. Okay. Kasi po-post na naman sa Facebook. Alright. Again, please say thank you to Miss Goldie for giving her expertise, sharing her expertise on this. And it's such a huge help kasi this is pre-incubation, and then they really need to understand what startup funding is and how it is right now, especially it's the pandemic. Okay. Okay, so ready na lahat? Brown out ako eh. Okay. Okay, ready when you are. 1, 2, 3, smile. Okay. Thank you
Yes.
so much, everyone. Gold team.
Thank you. Happy
Very
weekend.
much, guys.
Thank you,
And
ma'am.
Thank you, Ma'am
Bye.
Goldie.
bye-bye.
All the best.
Thank you,
Bye.
boss. Bye-bye. Gish? Kanang, wait lang ah. Himon sa takag ko,
Host, ma'am. Oo, ma'am. Pinasa ko ang recording. Mabalik na ako siya. Okay. Akong i-reclaim.
Okay.
Okay na.
Okay. Thank you, Gish. Thank you, Kai.
Bye, ma'am. Happy lunch, everyone.
Bye-bye.